In keeping with the reporting season theme, I mean, I was spoiled for choice today, but I did pick Goodman Group because its share price is up by close to 5.5%, and time-stamping this just past noon here in Sydney on this Thursday. Look, it reported today. It's seen an operating profit coming in at pretty close to $1.2 billion. It has got half-yearly assets under management looking really strong. It expects to see, it's actually upgraded its guidance going forward, and it's paying out a distribution of 15 cents for the half year. And shares off the back of that result are at a 15-year high. So let's get some analysis on Goodman Group. And I suppose what we need to talk about, Grady, there's so many favorable things said about Goodman.
Yeah.
And even, that it is a way to play the AI thematic here in Australia.
Yeah.
Even though it's property, it's getting into data centers, right? We're always looking for how we can get AI exposure here locally. But one has to wonder if it's fully priced.
That's the thing. It's the kind of the company that keeps going from strength to strength. Yeah. And I was actually talking to Paul from Bell Potter Online about this stock because he said it's one of the 5 stocks that he has in every client's portfolio because it is just a company, like upgrading guidance is an unheard of thing in this reporting season. And that's what we've seen investors particularly responsive to is the guidance outlook for the remainder of FY24. And Goodman Group is one that's come out actually upgrading guidance. So this company continues to go from strength to strength, and investors are obviously very impressed with the results today. Assets under management did come down slightly, but that again was attributed to a decline or revaluations and FX effects. So it's not actually anything that's material for the company. And again, they have a really strong outlook for the remainder of the financial year. This company is one that really stood out to me last reporting season for the full year of 2023 because it increased prices at a time when a lot of companies had to decrease prices to match consumer demand. And that didn't affect their demand at all, which we've seen today in the reporting season. And their demand, they're at 99% occupancy rate for all of their data centers. So they're going from strength to strength. This company, I cannot fault. I don't actually think it's fully priced because they have seen that they've got growth on the horizon. So yeah, a really good one. Definitely a buy for Goodman Group.
Buy. Even at these 15-year highs.
Even at 15-year highs.
So, to Grady's point, Paul from Bell Potter having it in every client portfolio, like I would struggle to find somebody who has a bad word to say about Goodman Group.
Yeah.
Yeah, I mean, it's probably the best in class. In fact, I shouldn't even have put the word probably in. It's the best in class.
Yeah.
In terms of property companies, if you want to own one in your portfolio, it's probably the one. What our members find difficult with owning it is twofold. Number one, the earnings per share have roughly doubled in 10 years, but the share price has gone up 5 times in 10 years, which doesn't exactly make it cheap. The second thing is, like all property companies now, with the accounting standards having changed several times over the last decade, they now have to continually revalue or devalue the properties in their portfolio. So every time interest rates go up, they have to devalue the value of the properties. Every time interest rates go down, they can revalue them upwards. And that makes understanding the business and its actual results very difficult indeed. So while their operating profit was up 11% for the half year and was outstanding, the actual reported profit is a loss because of the huge write-down that they had to take on the value of their assets. So there are TeamInvest members who own it, but most TeamInvest members look at it and say, it goes in the too hard basket. I can really only understand probably 20 great companies, and Goodman Group's a great company, but it's not one I understand terribly well. I'll steer clear of it. And I've never personally owned it for exactly that reason, but certainly best in class.
Best in class, but you are not recommending a buy.
Well, only in that it's hard to say no to a company that does so well, but its share price is up a lot. I mean, it's a property company on a PE of 37. Now, that's really high.
Okay, so maybe a bit too expensive.
That's it.
Okay.
Great company, but expensive.
All right.